Welcome back to Fast Money. A wild quarter for Bitcoin. The cryptocurrency surging 26% over the past 3 months, but the quarter ended with a thump. Bitcoin prices tumbling over the last 4 weeks. Despite the coin's disappointing performance, our next guest says Bitcoin is a screaming buy, sees it hitting $100,000 by year end. Meltem Demirors is the Chief Strategy Officer for CoinShares, co-chair of the World Economic Forum's Cryptocurrency Council. Meltem, it's always great to see you. How do we get to 100K
it's great to
by
be
year
here.
end?
I'm your resident Bitcoin bull.
How do we get to 100K by year end? What's the backdrop?
Yeah, let's just look at the landscape. As I always like to say, you got to bring the receipts. So here are the receipts. If we look at what's happened over the last 6 months since Bitcoin hit its previous high of around 65,000, we saw a lot of risks coming off the table. There was a lot of leverage in the system that got flushed out. Right now, we're hearing rumblings around a potential Bitcoin ETF approval. That would be a cash-settled contract-based ETF. But still, there's a lot of buy the rumors, sell the news behavior in crypto. That's a big catalyst we're looking at in Q4. There's also not a lot of open longs in the Bitcoin position anymore. So we're seeing a lot more firms taking on more bullish long calls. In fact, there are a number of six-figure long-dated option calls that are seeing some action going into the end of Q4 and early Q1. And I think most importantly, honestly, is there's a lot of cash sitting on the sidelines, and a lot of investors are now seriously contemplating an allocation to Bitcoin in their portfolios. And there are now so many different avenues through which to do that, whether it's through a publicly listed investment vehicle or through assets themselves on platforms like Coinbase or Robinhood or Square. There's just an absolute plethora of options that are opening up the channel for retail and professional investors to get exposure to the asset class.
Hi, good evening. Thanks so much for joining. Quick question about some of the regulatory overhang in some of the space, particularly what we've seen out of China. Does that change your outlook at all, or can you kind of make investors a bit more comfortable in terms of how they would kind of abate those risks?
Yeah, absolutely. Look, I think China has banned Bitcoin about 16 times since 2013, and each time the ban is slightly different. This time, obviously, China is very concerned about minimizing capital outflows in context of what's happening in markets in China. And so I think in the macro scheme, we've seen a shift away from China and Bitcoin markets. Since as early as March, we've seen a shift in trading activity favoring US and Western Europe trading hours, as opposed to historically the most of Bitcoin trading would happen during Asia trading hours. That's shifted. Even the trade pairs themselves, it used to be that the CNY Bitcoin trade pair or the Tether USD dollar sort of trade pair with Bitcoin were the most popular. That's shifted. We now see a lot more straight dollar Bitcoin trade pair activity, which is a sign that more of the participation in the formal Bitcoin market is happening through regulated existing financial institutions that are accessing the asset class through regulated financial institutions here in the US as well as in Europe. So again, generally, as we look at the market, really the majority of the impact on the China side has been on the mining side. A lot of that activity has shifted to Iceland, to Kazakhstan, the US as well. But if we look at trading activity in market microstructure, that activity had already shifted more to Europe and the US. And so from a market impact perspective and from a trading perspective, the China narrative hasn't really had much of an impact on volumes there.
One of the tentpoles, Meltem, to your $100,000 case is that inflation is not transitory, and that's something that we talk about a lot on this show. At the same time, what if the Fed is right and inflation is transitory? How much of a tentpole is that to your bullish thesis?
Look, I think at the end of the day, volatility is present in all markets, not just in Bitcoin. I think one of the biggest stories for Bitcoin over the last 18 months is a relative volatility story. One of the biggest sort of challenges that many investors had with Bitcoin historically as an investment was its perceived volatility. But as we saw in markets over the last 18 months, right, volatility in all asset classes, including things like treasuries, which have historically not been that volatile, we've seen a lot of volatility. So I think from a relative perspective, investors are getting much more comfortable with the volatility of Bitcoin. And again, as they look at opportunities across the investment investing landscape across the board, there's a lot of inflation in asset prices themselves. It's not just equities and tech equities in particular, but it's also real estate. It's, commodities. It's all sorts of assets that are seeing rapid price inflation and a tremendous amount of capital inflows. And again, I think cryptocurrencies are no longer a sideshow there.
But
cryptocurrencies are the main show.
Just quickly, Meltem, I mean, who's to say that Bitcoin isn't inflated right here? I mean, if there is no alternative and there's money and people want to allocate to something that's going to give them some yield, then why isn't the move that we've already seen in Bitcoin simply an inflation of this asset class?
I think Bitcoin's number one characteristic that we often don't appreciate is the fact that Bitcoin has the scarcity property that many other assets don't. And Bitcoin's scarcity, especially in what we're expecting to see in Q4 when it comes to demand for Bitcoin, has a dramatic impact on price, especially when we see, $50 billion of Bitcoin around the world in Bitcoin-based investment products. That's supply that's taken off the market, and that can have, really dramatic impacts. We've seen $10,000 a day candles sometimes in Bitcoin environments like these. So again, I think we can't understate how important the supply constraint on Bitcoin is in terms of its ability to have dramatic price movements. So
right,
we're optimistic.
Always great to see you. Thank you.
Thank you for having me.
Meltem Demirors of CoinShares. Tim Seymour, you buy 100K?
At some point. I'm not going to put a timetable on it. I do buy the scarcity value. A lot of people look at the SEC, friend or foe. I think the SEC is friend here, and I think you regulate this environment, which is ultimately what they want, and they want to protect investors. You're going to see this move a lot higher. What's fascinating about the inflation argument, and Meltem shouldn't have to answer this question. I'm not sure many people can answer. What happened to gold? And did Bitcoin really steal the thunder from gold? I don't think so, because I don't think you've seen institutional adoption in the way gold at least has been. But it's fascinating, because the argument why Bitcoin could be that great diversification in a time of monetary debasing, gold has done nothing. Gold is down 10% from the summer and isn't catching a bid in this environment. It's fascinating.
Guy, just quickly, what happened to gold?
Hard to argue with that. I mean, without question, I think to a large extent, now that they're close probably to $1.6 trillion or so in crypto, I mean, that money probably would have found its way into gold. So I do think it's become a bit of a zero-sum game. That coupled with the fact that rates have gone higher, which lately at least has not been particularly bullish for gold, those things line up. It's hard for me to argue anything that Tim said. I'll remain a believer, but it's very hard to do so at these prices.